Welcome back, everyone. It's Thursday, August 17th. This is NYU grad. Just want to, before we jump into the markets, I wanted to thank everyone at the Substack team on the community side. I have some very exciting news to share. I was featured via the Substack Discover page on both the app and the website. So for all the new subscribers coming in today on Thursday and the coming days, I welcome you all. Thank you so much for subscribing. It means the world to me that you're here to check out some of the content that I'm writing as well as podcasting. And let's get into the markets today. So there's a couple of things I want to highlight, but let's jump into the breadth numbers like I usually do every day. So today we had 47 new highs, 416 new lows, 29% of shares were advancing versus 66% declining, of which 70% on the NYSE AMEX and the Nasdaq are now below the 50-day moving average. This is not good news for the bulls. Prices really need to get above the 50-day as soon as possible. We're talking like, maybe by Friday, end of day, or at the latest on Monday. The longer prices stay below the 50, it's just going to pressure to the downside. What stuck out, the yields today are at a record high. We're talking 4.3% plus for the 10-year Treasury. Mortgage rates still remain highly elevated here, so these are things that you're going to want to watch. In the morning, I had posted that it's not going to be good for anyone unless you're the issuer of yield products or writing mortgages. And this morning, I was basically putting on Substack Notes. At the open, we're either going to see a reversal on the 10-year Treasury south, or prices of equities are going to continue to fall, or we're going to see something I've never seen in my trading lifetime, yields going higher and equities rallying. And sure enough, that's kind of what happened today. During the lunchtime, what I observed was the dollar and yields dipped like a pinch, not even a lot, okay? And prices were starting to try to rally, but yields were still at 4.3% at 12:30 as I was strolling over to Sweetgreen for lunch. And as soon as I got back to the office, I was looking at prices in the afternoon. The sell-off continued. It actually accelerated. There was no relief at all for yields whatsoever. And if you've been following me on the Substack Notes and on the podcast, I've been noting that if we break 4444 on the ES, equivalent on S&P is like 43 and change. If we break 4,444, which is a high volume node, we were going to quickly get to the bottom of the previous range, which is roughly 43.68. We got close today at the close. We finished at the lows at 43.78. So this is definitely not a bullish signal here. However, we're very oversold. So I'm expecting a bounce of some sort. But what was strong today, we have Google up 1.4%. Cisco was up another 3.3% today. A lot of defensive names were up, like Pfizer, J&J, Bristol Myers Squibb, Exxon Mobil. Like Pfizer was up 3.1, J&J was up 1%, BMY, Bristol Myers Squibb was up 2%, Exxon Mobil was up almost 2%. Everything was weak. The only sector that was green was energy. So that's kind of the summary in a nutshell. What to watch moving forward: you have NVDA earnings next week, August 23rd. NVIDIA is already kind of under pressure, so we'll see if there's a bounce here. Keep watching yields, the yield inversion. Keep watching bonds. TLT looks like it's just going to plummet. And as you hopefully know, as bond prices go down, yields go up. It's just an inverse relationship. That's all tied with currencies, so keep watching the US dollar and US dollar pairs like the yen, the British pound, as well as China. Watch for bounces, right? Like I said, we're very oversold. But if you do see a bounce, see how prices react if we can get back to the 50-day moving average. If you see a bounce and we can't even get to the 50-day before a sell-off, that's really bad news for buy the dip crowd. So right now it's a good time to protect assets. I would say if you're very long here in your portfolio, it's still not a bad idea to hedge against those longs with put options or inverse ETFs, but be very careful. Inverse ETFs are made for trading in and out, not holding for a long term. I am not your financial advisor. This is content for research and for entertainment, but follow along, kind of learn what I'm seeing in the market, and email me if you'd like to share content that you'd like me to cover. And if you want to stay anonymous, that's fine, just let me know. My email is nyugrad@substack.com. And again, I want to thank you again to Substack for featuring me. It's an honor. We're getting really close to 1,000 subs, so that again in itself is an honor. The podcast listeners and downloads are picking up, so for all the subscribers who are engaged with the content, thank you so much. It means the world to me that this work, hard work, is paying off and is actually valuable to someone else, which was the whole goal of growing the Substack and the community. So I will check you guys on the next one. Have a great day.